The stock market saw its biggest drop since the U.S. began striking Iran over the weekend. Tonight, the Dow was down just over 400 points at closing. The S&P and NASDAQ also down. Mike Armstrong, the president of the Armstrong Advisory Group, is joining us now. Mike, thank you for being here. We want to ask you about yesterday. The markets recouped back the losses from earlier in the day, and there was some bounce back throughout the day after the Dow was down more than 1,100 points at one point. So what can you tell us about these swings in the market during international conflicts?
Yeah, there have been some big swings so far. Thank you for having me. So the biggest swings we saw, earlier today, as you mentioned, Dow off nearly 1,200 points at one point in trading, and Sunday evening when you start getting futures markets trading, you did see equity markets down big then as well. Overall, though, both yesterday and today, you have not seen big swings in equity prices overall. I think we're down less than a percentage point from where the markets closed on Friday. And frankly, some of this is logical. Some of it is perhaps just some confidence on part of consumers and investors in particular that, hey, this conflict, like many others that we have seen, maybe it just does not stretch too long and become a real economic problem for the United States. Time will be, the real tell on this, though.
So, Mike, we did talk with you yesterday about people nearing retirement and how they typically plan for things like this. But what about younger people who might not be creating that nest egg yet? What should they know about situations like this when the markets are volatile?
Sure. Well, the evidence from the last quarter century or so has been when there are geopolitical tensions, it can lead to market turmoil in the short term, but it hasn't done much to throw us off the market trajectory that we have been on. It's largely been dominated by other concerns, such as the events that led up to the great financial crisis or the recession during COVID. But when you take a look at recessions over a longer term, oil price spikes can lead to recessions and were a major contributor to recessions post World War II during much of the 1900s. The important factor here, I think, will be duration of this. We have seen oil prices move up by 12%. Diesel prices in particular moved up like 30% over the last 2 days. If that's something that sticks around for some time, that can obviously lead to severe problems. If more of people's paycheck needs to go to filling up the tank because you need to get to work, then less of it can go to discretionary stuff that the markets rely upon. Overall, though, I think the biggest risk here would be a price shock that leads to higher inflation for longer, and for younger folks, that could mean lead to higher mortgage rates and other just prohibitions to saving as much as they might want to for their future.
And Mike, looking at the stock market really quickly before you go here, as a greater picture of the economy, the Federal Reserve is expected to meet in 2 weeks. So how could the Iranian conflict impact decision making when it comes to interest rates?
Obviously, I won't be in the room, but it's hard for me to envision any serious members on the Federal Reserve calling for rate cuts, any further rate cuts at this moment. If this event is anything, it would seemingly be inflationary with oil prices heading up. And so I think that will likely be one of the reasons given for no cuts to interest rates at this meeting. And frankly, it's kind of difficult to envision any of those cuts occurring until this event is passed and we're on further to the summer. So Fed will be meeting. My guess would be that they hold pat and do not move interest rates from here. And again, like I said, the biggest area you would see this for the average person is you did see mortgage rates below 6% all of last week. As of yesterday, they were up over 6.1% according to Mortgage News Daily, and my guess is that they stay there for the next few days at least.
Something we're going to be watching on both ends. Mike Armstrong from Armstrong Advisory Group, thank you for being here with us tonight.
Thank you.